Hello, this is Anthony Parent of Parent in Wynn LLP the IRSMedic, and in this video we're going to talk about what to do when your offshore bank is blacklisted. Today we're going to cover what do we mean by a blacklisted bank. We're going to talk about what your options are, and actually one of those options is streamlined, believe it or not. We'll talk about that in a little bit. And also when an opt-out in an OVDP makes sense. And then we'll talk about the traps of doing something else, such as a soft or quiet disclosure. And also, lastly, don't lose your innocence. So the first thing is, what do we mean by a blacklisted bank? Well, right now there's about a list of 50 as of September 25th, 2015, and this is a list of foreign financial institutions. These are banks that the IRS or Department of Justice has a non-prosecution agreement with, or banks that the IRS or DOJ is investigating with something called a John Doe summons. And what it means is that if you're going to disclose, and pretty much you don't have much of a choice if you are not currently under a grand jury investigation, you're going to fall under OVDP FAQ 7.2, Offshore Voluntary Disclosure Program FAQ 7.2. And the reason why is because the IRS looks at you as not all that voluntary, right? Because there is a non-prosecution agreement with that bank where the bank is going to disclose its U.S. account holders. Or the IRS Department of Justice has to go through all the trouble of getting a John Doe summons to find out who has it. So because the IRS looks at you as not all that voluntary, that is, you don't have much of an option, they want to hit you with a 50% offshore penalty, not the standard 27.5% penalty. Now, just to put this in perspective, is that if you don't go through an OVDP, you would have a 50% penalty and you might go to prison. And there might be some other things there too. Also, something to keep in mind is under this, it gets a little bit unfair. We'll talk about some ways to address that. Is that 50% penalty will attach to the value of things without FBAR requirements like rental real estate. So, who really wants to take that 50%? Not a lot of us do, right? But here's the thing: if you weren't so innocent, if you weren't such an innocent little lamb, you just may want to take that 50% hit. We certainly have clients who are doing that. They really didn't have much justification. There's really no great grounds for an opt-out. And the reason why is, again, because if we look at what could happen without getting into an OVDP, the IRS Department of Justice is free to prosecute criminally. And this is the hot topic. This is what they're looking to get. They love the press releases on offshore compliance. This is the focus of the IRS right now. And if you don't get in the program, you're going to be probably looking at at least one willful FBAR penalty at 50% and incarceration. Now, here's the thing, though. And this is the thing that surprises people. Even if your bank is on this blacklisted list, right, you can still file a streamlined submission. But you have to be innocent or negligent, okay? It's still an option. So that means if your offshore penalty would be 5%, and guess what? Your rental real estate isn't included in that penalty base. So it gets a little bit better. And then it's even better for people who live overseas. They have a 0% penalty, okay? The key is whether you were willful or not willful. It doesn't matter if your bank was blacklisted. It matters what you were thinking or not thinking. Now, what if you want to do something more than streamlined, but you really don't want to pay that 50%? Well, in that case, you can opt out. And those are for cases sometimes that there might be some facts that appear to be worse than they are, and we want some additional protection or to get out in front. Sometimes people do want some protection from criminal liability. It makes a little bit of sense. And there we're going to submit and get the criminal prosecution, but then we're going to argue and bring up the facts that show why a willful penalty should not apply, but non-willful. Also, when cases where we have bank accounts that are low relative to other OVDP offshore property, that is the rental property. For instance, if your offshore banks were valued at $100,000 and your rental real estate was $2 million, well, there you would opt out, because even if you were hit with willful penalties, right? You're still in a better position because if you were hit with a willful penalty at 50%, that's $50,000, and we're just going to assume a mitigation things don't apply in this. You would be hit with a penalty of $50,000, and your rental real estate is hit with no penalty. So there, you would just want to opt out, and if you lose, it's still a win. Another place where you might want to enter into full OVDP and opt out is where you are willful, or maybe somewhat guilty, but you have an appetite for a fight. Or now I want to talk about what the options are, right? And a lot of people don't want to do that 50%, and they're willful. And so they look to the quiet or soft disclosure about doing something else, just getting it out there, and they think that's going to protect them. So let's think about how this works. You submit an amended 1040 with foreign income. You file old FBARs. Now, this goes to the IRS and to FinCEN. Now, what part of this seems quiet to you? What part of this seems soft? I mean, you're sending this information to the IRS. So you're saying when you send information to the IRS, they don't know you sent them information? Their databases don't know, oh, there's an update to this tax return. Whereas the previous 1040 had no foreign income, well, now we see foreign income, and we might even see a Form 1116 foreign income tax credit. So how does this work exactly? How is filing an amended return that includes foreign income not telling the IRS you have foreign income that you previously didn't report? How is filing an FBAR that you never reported before, and then filing it, something the IRS doesn't know? What you're trying to do is tell them, look, I have this stuff. So it's not quiet, it's not soft. The IRS knows who's doing it, they just haven't gotten around to everybody who's done it. I can tell you the IRS has gotten to some people, and when they come, it's not pretty. They want to hit them with the 50% penalties. Just calling something quiet or soft doesn't make it true. I can call myself the king of Siam. Quiet is not quiet, soft is not soft. It is loud and clumsy. The IRS has time to get you. Now, here's something to think about. What about those tax professionals doing this for people? Because, here's something I've heard. A qualified soft disclosure, whatever that is. And again, that's calling yourself the king of Siam doesn't mean you are, and calling it qualified doesn't mean it is. It's nothing. It's a nothing. If you go to one of these tax professionals advising you to do this, you are going to become infected with a viral liability. Let me think, and this is what I mean by that. That guess what? You are probably not the only person they advise to do this. Right? So the IRS is going to come along, and they're going to find somebody who's done a soft disclosure. And they're like, okay, who is this person who did this for them? Okay, so it goes. So they're auditing one taxpayer who's doing a soft disclosure. It tracks back to the tax professional, and now the IRS comes knocking on the door of the tax professional. Hey, what's going on, buddy? Who else did you do this for? Okay, we're going to subpoena your records to see who else your clients are. So you will lose leverage, and criminal charges can spring. We haven't seen that yet, but I've been told it's coming. Now, when that happens, you should expect your tax professional to testify against you, even if they were the ones who told you to do the quiet or soft disclosure. That's the way it works. They're out to save their skin, and do not think there's an attorney-client privilege that's going to protect you from that. There's recent cases where they've blown through that, where testimony was invented by a tax attorney, and that jury was still able to consider that. So here's the point. Don't lose your innocence. And also, what are you going to do next year? Are you going to report this or not report it? There's risks to either one. If you report it, well, then what about now you're learning the IRS that, well, what about the previous years? And if you don't report it, you're going down the same road. It's getting a little tougher. If you have non-willfulness, exercise it. Don't let it change into willfulness. This is Anthony Parent of Parent and Wynn LLP the IRSMedic. Thank you for joining me on this when your offshore bank is blacklisted. Now, I want you to send comments to info@IRSMedic. Don't be shy. I can't say I know everything, and I learn something new every day, and it's because people share us some great information. Also, if you're interested in our services, call our offshore hotline at 888-477-4258. Thanks for watching.